Do not try and bend the spoon. That's impossible. Instead, only try to realize the truth.
What truth?
There is no spoon.
There is no spoon?
Then you'll see that it is not the spoon that bends, it is only yourself.
The Oracle will see you now.
What is going on YouTube and X? It's Brendan from Market Makers. This video will also be posted on our X. So guys, follow us there. That was formerly Twitter, of course. I'll pin our X in the YouTube comments. Give us a follow. Want to build up that community. Want to keep building our YouTube community, which has been growing fantastically since 2021 when we started the channel. We're about to hit 30,000 subs. I want to get some economists on here, some people that I can have conversations with that I think will help you guys in your market view and aid you in your trading and pursuit for financial freedom. So definitely subscribe to this video, smash the like button, give us a follow on X. Guys, this video is going to be heavy into the esoteric 7-year cycle. We're going to talk about that. We're going to talk about some other esoteric concepts such as sequencing, because you guys need to know what's happening in the marketplace. Everybody keeps asking me about the Shemitah cycle. So we've been over it many times because that's what put me on the map here on YouTube. That's what aided my predictions for what would happen to Bitcoin, what would happen to the markets. And that's what blew up our YouTube channel from 12 subs when we started in the spring of 21 to almost 30,000 now, was my predictions in the marketplace. The 7-year cycle was discovered by Jonathan Cahn, a religious scholar. He wrote a book over a decade ago about it. So I'm going to publish the original video from Jonathan Cahn on our X. It's currently on our Rumble. If you guys like it on X, forward it to your friends, let other people see. And I'm going to go over it here in the macro view for you. And then I'm going to show you some esoteric sequencing that can predict exactly what the thumbnail is potentially talking about, a market crash warning. I'm going to show you that, and where I think the market is bottoming, when I think the market is bottoming. I'm going to show you all that in this video, so stay tuned for this. All right, guys, let's go ahead and jump into this. What is the Shemitah cycle, the 7-year cycle? Again, Jonathan Cahn discovered this. I want you to watch his full video so you can get all these answers, because every single video people are asking me questions about it, and it's all in his video. But I'm going to focus on the financial aspect of it. So many things have happened in the 7-year cycle, but the financial aspect specifically related to the super bubbles. If you look at 1972, the 1972 crash was in the 7-year cycle. The 7-year cycle occurred and the S&P dropped, the largest break since 1929, by the way, 64% in that 7-year cycle. The next 7-year cycle began in 1970, 1980. What happened? Volcker came in, jacked up interest rates to fight the inflation from the 70s, jacked them up to 20%, stock market crash. Then you had 2 recessions that occurred after that. Fast forward another 7 years in the Shemitah cycle, you had the crash of 1987, Black Monday, largest single point daily drop. The Dow dropped 22% in a single day. Okay, so that was the largest drop ever. That also, by the way, not coincidentally, is when Bernie Madoff discovered in his revelations based on his interviews that the market's rigged. The guy, and he went on and he said, I wonder if I can con them all. This is the chairman of the NASDAQ, but I digress. We'll go into that some other time. 1987. Then fast forward 7 years to the next 7-year cycle. You had the bond crisis in 94, 95. Okay, the bond crisis. And then what do you have after that, guys? 93, 94. Then you have the dot-com crash. That's what you had in 2000 to 2001. Shemitah began in 2000, September to September, ran until September 2001. The market bottomed in October of 2002, I think October 4th, the fall equinox just after. And then fast forward 7 years, you have the great financial crisis began in 2007. September of 2007, the Shemitah cycle starts, and by March of 2009, the S&P fell 50%. And of course, in .com, the S&P fell 50%, and the Nasdaq fell 84%. Both of these last two 7-year cycles, the fall and spring equinox played key pivots in the marketplace. It's not about what you hear on TV about seasonality. This is about cycles. This is about the market being organic and a living, breathing organism. I say it all the time because people don't want to accept that in the marketplace, but we accept it in every single aspect of our lives, our very own life cycle. I live on a ranch. There's growing cycles for crops. Everything functions based off of a cycle, based off the law of vibration, whether we're talking at the cellular level or just things such as culture, music, fashion. It moves in cycles. We just accept this. But with markets, people want to give you the sales pitch of it's all about fundamentals. It's not. The market moves in cycles, and certain billionaire investors know this. Perhaps it aids them in the reason as to why they're billionaires. Leon Cooperman knows about the 7-year cycle. He was on CNBC a month ago. A billionaire investor, 80 years old, has seen it all. Lee, play the clip.
So you think the major averages are coming down in the second half?
Yeah, I think so. Yeah, I wouldn't be surprised if I wouldn't make this a definitive comment, but I wouldn't be surprised if we've seen the high for the year already. I don't think my big issue, my big view is, and I've said this about a year ago in the program, I have a view very much like the Pharaoh had a dream, and his dream was interpreted by Joseph. It was in the Bible, and his dream was we're going to have 7 lean years following the 7 fat years. I don't expect we see a new high in the market for a long time.
And then, of course, there are people who have no idea about the 7-year cycle, and they do TA and the host on CNBC, and they come on and they talk about, well, why is October or March? Why are these sometimes bad months or good months? Or they have no idea of the pivot cycle in the pivot points in the cycle, the cardinal points in the market. And here's an example of that. Lee, go ahead and play that clip.
I think all months have odds, I think, around the teens, like 13th, 14th, 15th. The odds of October, they just are bad. They're not bad. They're good because there's been so many bottoms, but they can be very frightening bottoms that occur in October over the years.
Yeah,
something like that.
Little washouts, right?
And why does it happen in October? Halloween?
It must be Halloween,
Trick-or-treat?
very spooky. There is a Friday the 13th, I think, this one too. So who knows? But what I will
And other billionaires still, like Stanley Druckenmiller, who averaged 30% returns for 30 years in the marketplace, famously made $1 billion in a day. He knows about the market cycles. He has been on record saying he doesn't think we see a new high for the rest of the decade. 7 years. He doesn't think we see a new high for the rest of the decade. And then he also said this. Play the clip, Lee.
The one thing I bristle a little bit when I hear people on your network is they say, well, I'm bearish, but I'm bullish for the long term. Look, you can have a period of 15, 20 years, 10 years where the market doesn't go anywhere. That doesn't mean you can't make money. You could have made money, plenty of money in the 70s at various times. We had 260% rallies. I'm not saying, go get another job and you can't do stocks. I'm just saying we've had a hurricane behind us for 30 or 40 years and it's reversing. And I wouldn't be surprised, in fact, it's my central forecast, the Dow won't be much higher in 10 years than it is today.
The people that know. They understand the cycles. When you watch people that are bearish on YouTube, a lot of them are bearish and they may end up being proven correct, but they don't know why they're bearish. This is why they're looking at assets like gold and being super bullish on it, even as though it's repeating exactly what it's done in the previous cycle, which is crater. Okay. And this is why the crypto people have zero idea what's going on, because the crypto people have only existed in the longest bull market and stock market history. That's the whole existence. So the stock to flow model, anybody with laser eyes, they have no idea what's going on. And most of these guys hide behind cameras. They don't even show their face in the crypto space. Okay. Because people always ask me if I'll do a collaboration with so and so. I'm not doing a collaboration with somebody that doesn't even show their face. Reason being, my theory on that, by the way, is I think if you saw their face, somebody on YouTube's going to recognize them and be like, oh shit, that's Phil down at McDonald's. I know that kid. But, this is a business for a lot of people. They don't actually trade. They just want to do TA and they want to commercialize their channel. We are not monetized. You guys can support us by checking out our sponsor, SimpleFX, if you want to trade with us. And that's a fantastic platform for you guys to be on. Guys, with our link, you do get up to $5,000 instant first-time deposit bonus based on your first-time deposit exclusively with our link. Let's talk about the Shemitah cycle pertaining to the market here, okay? Pertaining to the S&P. Now, if you notice, it's been, 14 years, 15 years since the last cycle. Nothing really happened in 2015, right? Nothing really happened. 2014, 2015, nothing happened. You had some issues over in China. Nothing happened. And people ask me, then how come, if the 7-year cycle works, how come nothing happened since the GFC until this cycle in 2021? Well, again, longest bull run in stock market history because we had trillions, as Stan Druckenmiller said, 30 trillion in QE, 30 trillion in 0% rates. Artificial market inflated the next bubble. And then what happened, guys? I got my family and my money out of stocks looking at the S&P here on the daily back in November of 2021. Okay, that's when I got out of this, knowing that September 21 to September 2022 is the Shemitah cycle. You'll understand this when you watch the full Jonathan Kahn video, okay? Knowing that. So did I miss the very tip top? Yeah, don't care. You know why I don't care? Because I didn't get hurt at all from the 24% drop the S&P did. And by the way, traded this drop the whole way, and the 38% drop the NASDAQ did. Okay. Meanwhile, what are the salesmen of the Ponzi doing on CNBC and Bloomberg? Tom Lee was right here in January 4th, when we made our all-time high. And we got our pullback slightly after. He said this is a generational buying opportunity. He predicted new all-time highs for 2022. Market cratered. A month ago, Tom Lee's on CNBC predicting once again new all-time highs for the S&P. What's the market done since then? It's fallen 8, almost 9%. Okay, the people that are on TV that have a vested business interest in you giving people money so that they can invest for you, it's a business. Understand that. You can wake up from the matrix and understand what's actually happening in the marketplace. Understand that you can trade these markets based on cycles, based on just some common sense knowledge, and understand that the recession was always going to happen. The recession was always going to happen, even though the salesmen were out in full force this last 6 months, last 9 months, telling you soft landing, soft landing. The Fed saying the same thing. The Fed said the same thing in 2000, by the way, guys. The Fed said the same thing in the GFC, soft landing, and the market believed it. And then people get crushed when the market falls 50%. Nobody wants to learn from your mistakes. And if you're looking for people on the business networks to tell you to get out of the market, they're not going to, because that's what they make their living off of, is the fees they charge you for losing your money for you, because 84% of them cannot beat the S&P over a 10-year period. So we had September to September. In the previous 2 bubble cycles, S&P fell 50%, okay? It bottomed the following year. So you had the bubble in 2000 to 2001 was your actual Shemitah year, September to September, and the market bottomed the following year, 2002 in October, fall equinox. When I say spring and fall equinox, guys, I'm talking about a 30-day time period revolving around the spring or fall equinox. This gives you your key dates in the marketplace for these crashes and these bottoms in the marketplace, okay? Because that's another comment I keep getting in the comment section. Market declined, and when did the market bottom? October 13th, fall equinox. You have your pivot on the circle. You start moving back up. And look where we got to here. We got to our July high, and now we're descending. Okay. We have a key pivot coming up in the marketplace as well for October once again, but I'm going to show you something that's really interesting. This cycle has been elongated for this 7-year cycle because what happened in March of this year? SVB failed, right? New York SIG failed. What did the Fed do? The Fed came out and added $400 billion in liquidity. The market should have cratered in 2022. You should have had your rally up probably to 4,200, your fall back down, lose 3,500, and then you could have bottomed last year. The Fed was slow to raise rates. The country itself is running massive deficits. We're at $2.6 trillion deficit, meaning spending money we don't have, which has to be created for this year. There's a 3-day period last week. Zero Hedge tweeted it out. 3-day period last week where we added 250 billion to the debt. We're over 33 trillion in debt. So the cycle is elongated. But I'm going to show you with some esoteric sequencing why I think I know where the bottom's going to be in the market, when that bottom's going to be, and a key pivot date that's coming up as well. So let's go ahead and get into this. So now we have our key TA. We're going to go over that in a minute, but I want to show you guys these concepts I'm looking at. When you're looking at sequencing in the marketplace, okay, you want to look at significant points. I'm going to go to the all-time high of the S&P. And let's go ahead and drag this down to the market low. Look at the count you have here. You have 201 bars, 282 days. So now let's take the low here in the market cycle to your next high of your rally, the high of your rally to try to take out the all-time high. 203 bars, 287 days. 201 bars, 203 bars. When you understand the law of three, key concept in trading, Charles Dow was aware of the law of three. W.D. Gann was aware of the law of three. Ralph Nelson Elliott was aware of the law of three, his 3 impulse waves. This is a common thing in marketplaces. You also see this in biblical texts. You see this in other religious texts. The Trinity, the law of three. These moves happen in threes. You have head and shoulders pattern, a double top, which is nothing but an ABC, right? ABC correction. You have 3 candlestick reversal patterns. You have 3 falling peaks, 3 rising valleys. So many law of three patterns in the market. We have 2 legs here, almost of equidistant lengths. So what I'm going to do now from this rally high, because I think this rally high is going to hold, obviously, I'm going to go out. The average, obviously, between 201 bars and 203 bars is 202 bars. So let's go to 202 bars, and let's see if we can find where this market bottom would be, right? What time period this market will bottom. Try to get to, there we go. This puts us out. Let me go ahead and mark this with a line so you guys can see this. Let's look at here. Where's my vertical? This puts us out May 6, 2024. You see that? May 6, 2024. So this is calling for this final leg. You're going to have rallies up and down, but your bottom in the market should be in by May 6, 2024. Let's see if it works, guys. What could change this? This is forecasting, right? What could change this? War. War could change this. We have 2 countries that are don't like us very much right now. I can't say these names. How stupid YouTube is. I can't say these names or I get pulled from the algorithm, which is also why I'm putting this video on X. So definitely follow us on X, guys. But war could change this. The Fed could change this. If the Fed comes out and ends up having to do QE because we have a market crash, it could change it. But the market rhythm, the harmonic heartbeat of the market right now is moving in these increments. You guys have seen my 43-day pivots, how they captured exact tops and bottoms in the marketplace. And when I'm looking at this, you cannot ignore the all-time high to the cycle low to the next significant high. We're within 1 bar of each other. Equidistant lengths here, okay? So these are my signal waves, and I'm looking for a market bottom come May 6th, right? We'll see if this plays out. And what will that target be? Well, guys, that target, as you guys know, we're going to look at that as well. But that target, let's go ahead and remove this. Simple concepts here I'm going to show you with this target. We're just going to go back to the pandemic low and look at all of the QE that came into the market here, guys. All of the QE, 0% interest rates. Of course, when did the pandemic happen, by the way? Lots of people pointed this out, spring equinox. But you came down and wicked beautifully the 46 at 35.36. You see that? You got below it. And again, the average recessionary drawdown is 33% from your cycle high. I showed you guys this in a previous video, but since we're talking esoteric concepts here, I just want to show you this as well. Let's go to our cycle high here. Come down to the average drawdown to the percentage point, 33% takes you to 3188. We'll call it 3200 at this 618. That's the average drawdown in a non-bubble environment. The average bubble drawdown is 50%. 50%, okay? That's the average bubble drawdown. If you start looking at that here on the S&P, that takes you down, and we've been over this many times, to the pandemic lows. That target would be roughly 2179. As I've been saying, 2000 to 2400 is where the S&P is going at the end of this, and look for that bottom early May, late April. That's my time frame I'm looking at, okay? So that's what we're looking at on the S&P. Now, the reason I said crash warning, I want to show you something here that's also interesting. Could mean nothing, could mean something. And we're going to look at the historical precedents for this because anniversaries are very important in the marketplace. By the way, when would the next 7-year cycle be? Anybody? The 100-year anniversary of the 1929 crash. That's interesting. Maybe not to some people. To me, that's very interesting. But let's look at this. So when we're looking here, let's go ahead and look at this on the, what am I looking for? Fib pull down. I forget what I was going to show you now, but I was going to show you something here for the fib. Oh, for the actual targets as well. If I look at this from this perspective, just the retracement of the rally. This is what I want to look at too. You're going to have key inflection points along the way, but I want to show you the signal wave for why I called this video warning market crash. Come on. There we go. 1618 takes you down to 2800. It would be a key potential pivot to hold here, okay, off that rally. But the signal wave I want to show you, let me go ahead and get rid of this fib, is simply this, right? Let's go ahead and look at this signal wave, and let's get our date range. That's what I'm looking for. Get too much caffeine going. Let's go to our pandemic low. Let's open this up so we can get the all-time high, make sure we get the exact pivot here. 652 days, 462 bars. That's your complete move up with the trillions in QE. 652 days, 462 bars. Let's replicate that. Let's go to your all-time high. 652 days. Let's go out. 652 days. Just want to show you where this ends up being. This ends up being, look at the date, Wednesday, October 18th, 2023. Now, I want to tell you why this is significant. Again, this could mean nothing. Do you know what happened in this time frame? You had Black Monday. You had Black Tuesday. You had Black Monday in 1987. That was October 19th. You had Black Tuesday for the 1929 crash, and that was October 29th. Let me make sure I didn't get those backwards. 1987, yeah, October 19th, 1987. So you had Black Monday, Black Tuesday, and could this be Black Wednesday, October 18th? This would be within your 30 days of your fall equinox as well. I think it's something to pay attention to because we're setting up very similar. George Gammon had a great video he did the other day on the similarities between this and 1987 with the yield spiking and the market not understanding the risk in the marketplace. And we're going to go over the TA, guys, but I would pay attention to this time frame, October 18th, Wednesday. Market likes to move. Market likes to have sequences. Black Monday, Black Tuesday. Could you have a Black Wednesday crash? Something I will be paying attention to, especially if the market's already selling or if the market has rallied and it's at a peak resistance level. I'll be paying attention to that. Let's go ahead and jump into our TA. Let's look at the S&P because we just did 20 minutes on that. Let's look at the S&P. The S&P came down to its 200. You see this? It came down to its 200, knife through it. By the way, we gave you this exact target. We gave you all of this, including the trade, guys. If you've been watching our channel at 43.36, captured this nice drawdown, came down, and now we're just on a daily time frame. We're trying to move back up. If the S&P, I want to show you where the battle lines are going to be drawn. You see a lot of weakness here still. You're at 42.34, right? You bounced off. It's very weak, trying to burn off that oversold nature of the marketplace. But when we look at this, we got to look at the yields. Everything's going to revolve around the yields. The yields pulled back like we talked about, right? And you can see you got overbought on your MFI. You want this to retrace, come down, and you want the yields to come down even more, maybe to this 4.629. The market will be a little bit more motivated to rally, even though I think this is ephemeral. I think this is temporary, and yields are going to go back up. I do think you're going to hit 5%. See lots of big houses, JP Morgan, other people calling for yields to be down more about 4.3 by the end of the year. I think you're going up, okay? These are the same people that don't understand what cycle we're trading in. So I think you're going to be going up after you test support and bounce back up, but it gives the market time to rally. And then what is the DXY doing? DXY went down in confluence with the yields. The yields are pulling around the DXY. You're holding this level 106. If we can stay down in this 106 level, not come into 107, we could get some more motivation for the markets to rally, okay? And let's go through Bitcoin and we'll go back to the S&P. Bitcoin over here, 3-day chart, not a lot to see here, right? You know your key levels on Bitcoin. 27,868, guys. You have to flip 27,868, come up. Where can you get our 39 to 41K target is if the yields continue to be flat and negative. If the DXY continues to be flat and or negative, you want to see Bitcoin flip 31,245, move up to harmonic expansion at the 2618, which is 41K. Depending on how I pull my fibs, 39 to 41K is my target for Bitcoin. Obviously, if the S&P loses to 200, the NASDAQ will break. You'll see Bitcoin pull down as well. The only support level you need to be worried about right now is 25. 25.2 is the key support level for Bitcoin. Until then, you're going sideways until the markets make up their mind which way they're going. And of course, we talked about this Bitcoin short that I did based on the confluence of indicators. In the last video, we did this in our Discord. You guys want to check the Discord out? All those details are in the video description. It is free to join if you care to join. SimpleFX and BingX will pay for your first month. Message Lee in the Telegram. The Telegram is in the video description. 5% drop, guys. 5% drop off this trade. Nice little trade. And if we look at the Dow, going a little bit out of order here, but look at the Dow. The reason, one of the key reasons, again, I'm very bearish on the market is the Dow needs to flip to 200 for the S&P and the NASDAQ to have any more upside beyond the downtrending channel, okay? Beyond the downtrending channel. Why? Because the Dow, again, is a mirror image, 30 companies picked from every sector of the S&P, and you are well below your 200. The Dow would have to flip 33,850 to get above the 200. I don't see a catalyst for that. I would love to see a rally back to back test it, which is what man, it's a good amount of points. Where are we at here? We're at 33K, so about 800 points, 850 points on the Dow to get up there just to test it, and it's not happening today. Now, if we go back to the S&P, I want to show you this on the smaller time frames because we already know the key levels here, right? You pull your fib, you have your fib level, your 43.36 was where we shorted, came down exactly to our target 42.10, right? Exactly to our target at 42.10. So carry these fibs over. Let's go look at the 1 hour time frame on the S&P. S&P. See your 43.36 up here? That's the trade up here. What I'm looking for here, guys, is some patterns that I can trade in the marketplace. And I'm going to show you this with the ABCD tool and explain this to you a little bit. Now I get a 1-4-1-4 ratio. If you understand ancient geometry, how it relates to the marketplace, I'll call it market geometry. 1-4-1-4 is root 2. The reciprocal to root 2 is 707 in here in this pattern that I'm drawing. If I can get 707 and get 706, let's see if we can find some confluence with this. Okay, and I'll color this pattern in and everything so you guys can see it better on your phones. But let's see if we can find some confluence with this. Well, from the 1 hour time frame perspective, when I was initially pattern hunting here, looking for some esoteric patterns, Fibonacci patterns, when I was pattern hunting, I was looking at the wave movements up. and I was looking at these wave movements. I saw my fractal form. I took my fractal, my measurement here. I saw 4307. Obviously, with the knowledge of 4300 being a key psychological level, I saw 4302 as well. I saw that forming in that smaller wave. And since we've had more candles since then, and you can also see this on the 4-hour time frame, what I see potentially forming here is going to be a W pattern, a Fibonacci pattern. Okay, let me draw this so you guys can see what I'm talking about. Where is my, there it is. Looking at this W pattern that may be forming if we can hold this higher low. Okay, if we can hold that higher low, I'm going to see where this target would go. So if I view this from that perspective, if this low stays intact, then what I'm looking at here is the 1618 at 4302. I'm pulling fibs from different wave measurements. Again, this is my Fibonacci analysis, looking at 4300, 4299, 42 in that range. So basically 4300. And we already know 4300 to 4336, where we made our fractal, where we cratered from, is going to be key resistance. So this is an area I want to see tested, okay? This is a key area to test. And if I want to do fib retracements from larger levels and start looking at Fibonacci confluence, this is all part of my Fibonacci analysis, guys. You can pull up from the highest pivot here on the downfall. I can get the 618 to line up beautifully with the 1618. You see this? Right here at the 4300 level. I see a lot of problems for the market at 4300. This looks to be a battleground for the marketplace. And if I go ahead and color this in and make it all pretty for you, you can see it here. So I have 4298 on my 2618 extension from a smaller wave. Again, from like a 4-hour time frame, I can do the same thing if we get this W pattern to form and get my 1618 in that neighborhood. I have a higher pull down with the 618 as well. So 4302. And from a Fibonacci X5 perspective, I'd be looking at this pattern. This is what I'd be looking at. We go to this fractal high at 4336, throw our leg, throw our pattern. If this low holds, may come down lower, doesn't matter. If this low holds, this is what I'm looking at. You see that? This is where I would be on this target, which is a roughly 4300. That's the first area I want to see if that holds when we come up to it. If it breaks through, then I'm looking at that level of 4336, the previous pivot resistance. You know, Harold Gartley wrote a book, Profits in the Stock Market, I think 1938. Think on page 238, I believe it's the first example of an ABCD pattern. AB equals CD. For you Elliott wave traders, it would be A equals C. But that is represented here in this pattern with reciprocal ratios as well. If I go to my A point with the trend-based fib, to my B point, down to my C, and we only look at the one fib because we want to see a 100% move. That's the one fib, 4297. So again, I just have a lot of targets here at this 4300 level that I want to watch. And that's assuming we can keep yields down. That's assuming we can keep the DXY at bay as well. That's the move I want to see, is to put in this market, come up to 4300, show me if you can break it. Show me if you can break it. And if you can break it, we can go back to the daily, because as you guys know, what's my upside projections here on the daily? Well, my upside projections, the cap, I believe, where this rally could go with peak euphoria would be 44.18, the 1618. I don't see us going to 44.18. I see us struggling mightily. Even here, when you look at this retracement at 786, I got at 43.08, the one fib at 43.06. I see us doing this on a daily time frame perspective, something in here, okay? Coming back down, retesting this. You're going to be making some type of macro double top structure, ABC pattern essentially, retesting this and breaking through it. We have the Fed coming up November 1st, and they're expected to raise rates. If Powell stays hawkish, which I would anticipate he does. If he comes off dovish and says, this is our last rate hike, we don't see ourselves raising rates, you're going to see a rally. And you could get up to that 4,800 or 4,400 level. Powell comes in hawkish, he could propel this downwards. Here's our rate hike. And by the way, we're still open to raising rates if we need to. So we're going to be data dependent. I don't think the market's going to like that. If the market doesn't like it, that means the yields are going to go up. That means the DXY is going to go up. Again, bearish influences in the marketplace, and you'll see the market sell off more. Now, if we go ahead and check out the NASDAQ's holding up very strong. And again, what was that drawdown in the NASDAQ, guys? Almost what, 40%? 40%, you got to 38% drawdown in the market in the 7-year cycle, with more to come in this elongated cycle. Trading on our channel, the NASDAQ hasn't broken down yet. It's being held up by the 7 stocks or 10 stocks, the Microsofts, the Amazons, the Googles, NVIDIA, Tesla. And I'm going to show you the perfect Tesla trade setup here too in this video. But that's what's being held up by, okay? And again, if I want to zoom in here, my next NASDAQ pull down, by the way, I mean, you got the 10.5 at the 618. That next pull down, 87.99. If you continued on that trend, we can take another fib, but we haven't even broken the market yet. So this video is too long. We'll get into that at another time. But if we go ahead and look at this, again, where could my peak rally go on the NASDAQ? It's looking like 15.1, 15.2. 15.1, 15.2. 1618's at 15.2, approaching the top of the trend channel. That's my peak rally, 15.1, 15.2. We'll see where the S&P stalls out at. If the S&P stalls out at that level of 4,300, I wouldn't expect the NASDAQ to get above this pivot, which is 14,920. You could see it get up there. S&P's at 4,300. NASDAQ somewhere between 14,825 and 14,920. I think you're going to get stuck in that level. S&P breaks above 4,300. Look for the NASDAQ to move up and start moving towards 15,000. All right, let's talk about the perfect Tesla trade. I probably should just do this in a separate video. This video is getting so long. What is my perfect Tesla setup? If we get more bullish in the market, let's say even if we break 4,300 and move up towards my 44.18 target, but if we break 4,300, I want to show you, Tesla did a 5% move. Yes, look at this move. So Tesla could do this move, okay? But you guys know we've been trading beautifully in this channel. You can just trade Tesla based on my trend channel. Lows, highs, breakdowns, lows, moves up. But this area here is key. I'm going to show you a signal wave here that I'm tracking very closely. Let's look at this on Tesla. On Tesla, if we take our price range, let's just look at this first move up, 31%. You see that 31% move off that low? If I want to match this equidistant here, let's go to 31%. Might have to move my screen up. 31% right there. Now, what's the shape that you're making? Do you see this? You're making this shape, right? Classic W Ponzi pattern. This whole market, guys. This is the shape you're making, all right? Can we find this on a fib? Can we get these signal waves, these equidistant waves, to equal each other and line up with a key Fibonacci ratio, such as the golden ratio, 1618, 306.42, boom. If Tesla comes up to 306, you see this? Tesla comes up to 306.42, equidistant moves, it starts building a top at 306. This is where I want to take my Tesla trade. If you're going to draw this using an X5 pattern, a little Ponzi pattern here for you. This is what this would look like, all right? This is your BCD expansion, 1618. This is what I'm looking at here. Basically a 100% retracement, just slightly over with X. This could be a fantastic trade with confluence with the markets. Tesla has the ability to do this. And what would even make this better is if the markets start breaking down and Tesla has the Tesla bulls still pumping the price up. So it's struggling when it gets there, even sweeter. Why is Tesla a good trade? Why would Tesla, a company that I really like, it's trading as a tech company, it's trailing earnings, I think, are 63, 64 times. And recessions, the recession norm PE for the market's 12 to 14. Tesla's been on a parabolic rise. How parabolic has Tesla been? Well, guys, you know, Bitcoin went up. I forget the 1,000% that it went up. Tesla did the same thing. This is part of the reason, if you understand the matrix of the market, the Ponzi nature of the market. I think that's about the low on in March in 2020. Look at this, 1,634%. 1,634%. Keep in mind, when Tesla was trading at this level, it was trading at 400 times price to earnings. 400 times. People have, you know, it's hilarious because, again, people, they shit on crypto all the time. Say it has no value, has no value. Not saying none of these companies have value, but again, it's all just part of the Ponzi. The company, to put this in perspective, if you had a house that you were selling for $1 million, $1 million, you say, hey, my house has been going up 30% a year the last few years, and I'm going to sell it for $1 million, right? Well, you think someone's going to come around and say, I'll pay you $400 million for your house? But it happens in the Ponzi of the market all the time, guys, all the time. But these are big bubbles. And when bubbles pop, you will see great declines. Tesla got down to the $100 level. It's going to take out its low because the markets have never put in a low prior to a recession. Not many people can afford $50,000 to $150,000 electric cars when unemployment goes up, which happens after the recession starts. Not many people can afford these things, guys. And you're going to see Tesla come down. And again, you're going to take out that low. And I have Tesla going around 40, 50 bucks. That's where I'm going to be looking at Tesla, which sounds crazy at 260. People have very short memories. Just in January of this year, you're in the 80s. So that's my thesis, guys. I will keep you informed on Tesla. Watch the move to 306. I would write that down in your books, mark it on your charts, pull your fibs the way I did, rewind the video if you have to. This one got long. It got away from me. Appreciate you guys. Like, subscribe, share this on X. Talk to you Thursday. Take care, everybody. Talk to you Monday. Have a fantastic weekend.